So I did a video just about, a week ago or so on 20 high growth stocks to buy now to watch. And I believe a lot of those stocks were on sale. And today I wanted to kind of use the same sort of basis where we look at the charts and we look at what analysts have to say, except this time we look at stocks under $10. I think you guys will really enjoy this video, but I do want to preface this by saying these are high risk stocks. I'm not telling you to go out and buy these stocks. Just make sure you go do your own due diligence if you choose to buy these stocks. I own a couple of these from this list myself, but I do recognize that they're highly speculative and I could lose my entire investment in them, so tread cautiously. That being said, on the plus side, these stocks have high potential for us. So without further ado, guys, drop a like down below, subscribe for brand new here, and let's get into our first pick, which is Nokia. I figured we'd kick it off with this 5G monster, which is a fairly cheap stock if you're looking at the share price. It's still a multi-billion-dollar company, but the share price here is trading right now under $4 per share. Nokia has not really had a great time in recent years. It's pretty much been on a downtrend for many years, ever since the dot-com bubble. Really, it's had a couple of spikes since, but nothing really has materialized for the stock. And it's left a lot of investors very frustrated. And most recently, we had this little spike right here where, we had GameStop mania going on and Nokia got caught up in a huge volume. This spiked the stock up to nearly $10 per share. A lot of people probably got out of their positions at this point. But at the same time, a lot of people got sucked in. And now there's a lot of interest in Nokia stock going forward because people are left bag holding this name. So I figured, I'll throw it on this list and we'll take a look to see what analysts have to say here in a second as well. But from a technical perspective, not the best chart. However, their technology is good, their balance sheet is decent, and their outlook as a business and industry is strong. So let's jump over here to tip ranks and see what analysts have to say. So analysts here believe that the stock is around 28% undervalued. It's a good upside here, should be around a $5 stock. And consensus is, more or less on the positive side. There's a couple of analysts that still believe it's overvalued today at $4 per share. But some of them believe that there's a lot more upside to go, like this analyst here with a 42% upside, or this one with a 50% upside. Now, of course, always take analysts' ratings with a grain of salt, but I do want to show you where the, people on Wall Street are seeing this stock at. So moving on, let's go on to our next stock here under $10, and this is our beloved View. This is a recent SPAC. This one merged very recently, actually, and the stock's just not been doing too well, guys. We can see here we're pretty much at the lows now. The stock has been down, selling off, and it's not really been the best time for shareholders. However, I believe that this one is severely oversold and should see some sort of recovery at some point. Now, it all depends on how the market recovers. SPAC type stocks, speculative type stocks, which is what View is, are getting hit really hard right now. So you're getting good potential here for opportunity. The stock is down 45% from its high. So this is definitely one that's hurting a lot of people that are in this one, myself included, actually. And I think that, we're going to bottom at some point. I don't know when that's going to be. But I believe the upside for this is a lot higher because the fundamentals of this business are pretty strong. Now, jumping over tip ranks, there isn't a whole lot of information when it comes to View here with analyst ratings because it is a fairly new stock. There is one analyst here. They believe it should be a $16 stock, which is 114% upside. But this analyst has pretty much no track record. They're not even ranked here on tip ranks, so you can kind of take that with a grain of salt. But I think that the stock should be much higher than the $7 that it is today. So I think there's good upside to be seen, but it may take time for this to play out. Moving on, we're going to look at SmileDirectClub. So this is one I talked about before for a potential swing play. And I believe if you did get in around that point, you probably would have made some money on the stock. It did rally higher, but then it pulled back and now it's down with the rest of the market. But it isn't down all that much, all things considered. What I like about SmileDirectClub is that it's currently sitting at a very strong technical support. This green line here signifies the 50 moving average on the weekly chart. And I believe this is, where it could find some support and bounce higher once again and make a run for that $15 price once again. We've done this in the past year where we found support there, found support here. So I believe this, if it holds and the market starts recovering, could be a pretty easy stock to make some good 20, 30, 40% gains on. Now, analysts have quite a mixed opinion here with SmileDirectClub. They believe that the stock is pretty much fairly valued right now at $10.50. And if you look at the individual analysts, we had one come out about 20 days ago and they are positive on the stock, but then there's a couple that are negative. A little longer time frame, a few more that are positive, some negative. So it's a real mixed bag here, guys. And personally, I wouldn't be investing in this stock long term. It's more of like a trading stock or a speculative stock. If you really like this space, Align Technologies is pretty much the play in my opinion. But if you're looking for something with a reversal, something that maybe the market's overlooking, this one is one to consider. Okay, so next up is a stock that I don't really see talked on YouTube too much, and rightfully so. It's kind of beaten down pretty bad. This is what the stock chart looks like over the last few years, and this used to be a very hot stock a few years ago in 2017, 2018. It ran up to almost $100 per share. Actually, yeah, just past $100 per share. But then it crashed down as fast as it went up. Now, a lot of you weren't in the market at this point, but I vividly remember this stock. You can even see I have some technical lines drawn here from before. And I remember watching people hype this one higher and higher and higher, and the fear that was there on the way down was definitely something that I will never forget. People lost their hats on this one. People were wiped out on this one. They were, going heavy. Wall Street Bets was all over this, and I think this one may be a little bit forgotten now, but you can clearly see there's some sort of base that it's formed at this price. Around the $8 mark seems to be a good floor for this. It IPO'd around this price many years ago. It's come down, bounced off it once, bounced off it twice, bounced off it, bounced off it, bounced off it, and now again we're around this level. If we can hold, we could see some sort of recovery in this stock. And if we look at what analysts have to say about this one, there's a pretty decent amount of upside to potentially be realized here. Around 51% upside is what analysts think, around $12 per share. Pretty much everyone here has a higher price for it, and some analysts are ultra bullish here with the 100% upside. And hey, maybe that happens if this goes on another run. But at these prices, if you like the space, you like the business, if you spend some time looking into it, this one could actually turn into a pretty good long-term investment if they get their financials back in check. Last I looked at this business, the financials weren't all that great, which is why I didn't really follow this company for the last few years really. But they're definitely a very interesting business and could be even an acquisition target at some point. Okay, so next up we have the popular game developer Zynga, and this one has been moving up quite nicely recently, getting back close to its highs, and it's getting a lot of attention once again with investors. This one's pulled back to a pretty good support level here on the weekly around the green line. We may see a little bit more selling to bounce off of this, but we're pretty close now around the $9 mark, and I think this one is definitely in a pretty strong uptrend here from the technicals, and should be a stock that does pretty well over time. Now, in terms of what analysts have to say, I think this pretty much aligns with what the technicals show us. And that is that this one is a strong buy with around a 35% upside, around $13 price target. Analysts are, for the most part, ultra bullish on this one. Credit Suisse is the only one that's really negative here. But you can see the upsides are varying from 30%, 50%, 40%. People are bullish on this one, and this is definitely one you want to keep a close eye on. And compared to the other stocks we looked at, this one seems to have reversed its trend over the last couple of years and is on an upward move. Moving on, we have Sirius XM, and this one is, again, one that we've all heard the brand before, but maybe you've never really considered this as an investment. I know I personally haven't. I don't really like the whole satellite radio space, to be honest. Maybe it was ahead of its time here with the dot-com bubble and it crashed, and slowly ever since, the last recession, 2009, the stock has started recovering, and those who got in there have done pretty well on their stock. And I think this could be, again, another acquisition type play. Right now we're sitting at around, the 200 moving average, a pretty strong level of support for this name. If you look at just the last few years, this has been typically where the stock finds support and bounces off of quite often. Of course, it broke past this in 2020 when pretty much all stocks just saw a free fall. But at this price point, the risk reward could make sense here for a nice swing play. Now, in terms of analyst ratings here, we see that the analysts are pretty bullish on this, around 13% upside. Nothing crazy, but hey, an upside is an upside, right? I see here that analysts see, for the most part, around 10 to 20%. Most of them are actually in the mid to high 20s. But then we have Goldman here with the big dog, really, an 18% downside. So they're not bullish, and until they turn bullish, there could still be a lot of negative sentiment because a lot of people in the market follow Goldman. And even though you have other big names like Credit Suisse, Morgan Stanley, RBC, Deutsche Bank, Goldman needs to really get on board here to bring in a lot more money into this stock. So keep an eye on that if you want to trade this stock here, Sirius XM. Goldman Sachs, if they ever come out and they change their mind on this, it could definitely be a catalyst for a rally here. Moving on to our next stock, we have actually an energy company, a fairly large one too, that seems to have found some sort of bottom in my opinion. So here we can see this stock has a floor around this level. It's done it, it's IPO'd close to this price, bounced off it once, bounced off it twice, bounced off it 3 times. It's kind of hovering around this level now, and we may be getting ready for a nice recovery. Now, of course, because it's in the energy space, there's a lot more that goes behind this business than just the pure fundamentals. It's a commodity type business, so the prices of energy and oil and all that stuff will affect this industry and this company. However, from a technical perspective, guys, this looks like one of the more suppressed energy plays, and it's a fairly sizable business to look into for a possible investment, not only a swing play. Okay, so now let's look at what analysts have to say about this, because this one, like I said, it's a pretty reputable company, quite a large business actually, so there's a good amount of analysts covering this one. You can see they have a pretty good upside of 43%. A lot of them are very, very bullish on this stock. This UBS is the most bullish with 100% upside, but a lot of them see this stock in like the 40-50% upside, high 20s. Is definitely one that you want to look at because it's fairly consensus here that analysts believe this is a strong buy. Moving on, this one is a company I'm sure you've heard of if you've looked at alarm systems, or maybe you have one of these at your house as well. ADT. This one hasn't been on the market too long. It's kind of been moving sideways, but it's definitely caught my attention here based on its current price and where the stock's sitting at. From a technical perspective, we're sitting right on our support level. It's going to take a little bit of volume to break past this, but once we do, this could be a clear reversal of the trend. See, we're making higher lows here, and this could be one that moves significantly higher in a fairly short period of time. Now, ADT analysts have a positive rating on this. It's a moderate buy, but a 32% upside, a $10 price target on the stock, so pretty, a few dollars higher from where we're at today. And the consensus here is also, again, pretty good. Even though this analyst at Barclays has a sell rating, it's still higher than what the stock price is today. The other analysts are pretty much all on board between a $10 and $13 price target. Pretty good upside. And like I said, based on the technicals here, this one definitely looks like one you may want to consider for a possible reversal. All right, we're getting into the back half of our list here. Coty, and this one is, from a technical perspective, looking a bit weak. We're in a downtrend for sure. However, you want to kind of catch this one on its channel. So right now, it's about to go test the 200 moving average. If it rejects this once again, like we did back here, this one will probably be heading for the lower range of this. So maybe closer to the $3 price point, and maybe at that point you want to get it for a reversal. However, I wanted to throw this in here because if it can break past this 200 moving average on the weekly and it holds, it could definitely be one that runs much, much higher. This could be a multi-bagger stock. The fundamentals are something that I haven't looked too deeply into yet, but from a technical perspective, this could definitely be the catalyst that breaks higher and moves us back to where we were before, around $30 per share, and that would be like a 4x on your money in a fairly short period of time. Now, analysts are not too happy with this one, and again, I haven't done too much due diligence in terms of the fundamentals for this business to really comment too much on this, However, analysts were very bearish on this before, but more recently, some of them have started to turn bullish. This could be a sign again implying that the company is turning things around. And if we see more of these analysts go to a buy rating, we could definitely have our catalyst to break us past this red line. And once that happens, it's pretty much clear skies, and we should see a nice run up to at least the $20 range, if not the $30 range. Okay, next up we have Clover Health. I'm going to make a dedicated video on this as well. You guys have asked me for that, and it is on my list to do, so don't worry, it's coming. But this one's down 63%. This is a Chamath SPEC. I believe this was IPO-C, and it's not doing so hot, guys. This one is definitely hurting a lot of people. Chamath definitely did talk good about this company, and when I looked into this business myself, I thought it was, worth the risk to reward. It's not done so well so far, but I'm in this one for a little while. Not really concerned about it down right now. I entered it as a SPEC position, meaning I'm willing to lose my entire investment on this if I'm wrong on my bet. And it definitely is not a stock that I will keep averaging into and building into a large position, because I don't have that kind of conviction in this stock. But it is one I think can return me a 2x or 3x on my capital in maybe a couple of years or so. Right now, they're facing a lot of issues with things like the investigation from Hindenburg with that research report. There's just a lot of press around this company that's negative. So once that news cycle turns around and the market starts recovering, this one may be one of the best recovery stocks in the entire market. Now, analysts here are pretty bullish on this last I checked. They believe this one is, has 62% upside, so over a $12 price target. There's only a few analysts covering this, but they all are pretty much on board here saying that this one is definitely undervalued at today's price of $7.84 per share. So definitely one you want to keep an eye on. I would not go heavy on this because it is still a risky business. It is a risky investment. However, because of the risk to reward, especially at prices here where it seems to be starting to find some sort of bottom, could be a double bottom here in the stock, it definitely has the potential to make you a good amount of money if that bet works out. Now, the next stock here is Casper Sleep. This one's interesting. Some of you may actually own their product for your mattress. I personally have not fully done a deep dive into this company, but it's definitely a very interesting company. I've held Leggett and Platt in the past, and I believe they supply some materials here for Casper. And overall, I think this one may be worth doing a deeper dive into for a possible long-term investment, because it has the brand name and it has a product that people are going to always need, which are beds and mattresses. Right now, it's sitting at a pretty strong level of support. I like to look at the weekly here, and we can see the weekly is showing us that they're on the 50 moving average, which is strong support. And we can also see that this aligns here with previous support that the stock has seen and resistance as well. So this is definitely a key level around the, $8 mark or so. It's a key level for Casper. We'll see if this one holds, and if it does, you should see an easy 20-30% return as the stock starts moving higher. But now that's not financial advice, guys. That's just, what I see happening if we hold the support. And this is just based on my experience in many years in the markets and following technicals and just seeing this pattern play out time and time again. Now, in terms of analysts here, Casper has an upside potential of 40% with a strong buy. Analysts are pretty bullish on this one. There's a few that are bearish on it, but this is from a few months ago, 4 months, 5 months, 7 months ago. So it's been a little while from these bearish analysts when they downgraded the stock, but the more recent ones, about a month ago, they all see some good upside. Morgan Stanley's the most bearish, if you will, with around 12% upside. But then you have Piper Sandler, 50%, Roth Capital, 60%, Citigroup, 50%. So it's kind of mixed here, but I would say the general sentiment for Casper Sleep is positive at this point. Alright guys, so that's pretty much it for this video. Again, if you haven't subscribed, make sure you do so here. And I hope you enjoyed this video. If you did, drop a like down below. But either way, thank you so much for watching, guys. I always appreciate your support. Let me know if these videos are useful, you find value in them, and I'll keep making them in the comment section down below. But anyways, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.